Hello there, my name is Diana Karamanova. I'm a senior commodity broker and analyst at Prospex Agro. Welcome to our second episode of Prospex Agro Market Talks behind the Brokerage Desk. This is a series of short audio podcasts with Prospex Agro team. These conversations are shared for informational purposes only and shouldn't be treated as trading advice. Today we are going to talk about soybeans, and I am joined by Vlada Zhigulska, senior commodity broker at Prospex Agro. Hi Vlada, welcome to the podcast.
Hi Diana, happy to be here again. And yes, this is an interesting topic nowadays.
So let's keep this practical, not just macro headlines.
Perfect. I'll focus on what buyers ask today, what sellers can realistically do today, and where the risks are hiding.
Great, so let's start. Canap report still paints Brazil as a massive supply story. 48.3 million hectare planted, yield 3.68 tons per hectare. Production is around 178 million tons and exports at 112 million metric tons. At the same time, agro expectations are even higher, 181 million tons, and USDA showed 180 million metric tons. That sounds heavy, but at the same time, Brazil is not just about big crop, it's also about quality and logistics. At the same time, Buenos Aires Grain Exchange kept Argentine soybean production forecast unchanged at 48.5 million metric tons, noting that additional near-term rainfall is needed.
Exactly, and that's the nuance the market misses. We are hearing also about damaged beans in Mato Grosso, but the key point is it's often not just a production loss, but it's also a financial loss for farmers.
But I think crushers can still use price discount damaged beans and blend them with better quality lots. So from a crush margin perspective, the beans can remain workable. Export logistics is the bigger challenge. We're hearing from EU and MENA clients about shipment delays from Brazil, which is supporting some spot demand for Ukrainian soybeans. Even so, Brazil's export program still looks strong overall. But at the same time, expectations for an extended US-China trade truce and possible new buying commitments supported futures and buyers' sentiments. And a stronger Brazilian real might reduce Brazil's export competitiveness, shifting some interest towards the US.
That's an interesting part. The Brazilian pace is running well ahead of last year. Last ANEC week for 2025-26 update shows the export program is actually running ahead of last year. January shipments are about 2.44 million tons versus 1.12 million last year. And February on the schedule is 11.71 million versus 9.73 million last year. So on a January-February basis, Brazil is roughly plus 3.3 million tons ahead year on year, and least based on the shipment schedule. And as of February 14th, harvest of soybeans in Brazil reached around 25% of the total planted area. Mato Grosso is leading state with around 61% harvested area.
Exactly, and that's why the market stays heavy. Even with quality issues in parts of Brazil, flows are still moving, and China is still the main driver. ANEC shows 66% of January exports went to China. So if China keeps absorbing volume, Brazil sets the tone globally, especially for basis and timing. But let's now bring it back to Ukraine. Even with Brazil this big, our local prices are supported.
Yes, Ukrainian soybean market is moving higher for a clear mix of global and local reasons. Locally, crushers have been actively buying, while farmers selling stayed restrained. And with a smaller soybean crop versus last year, the available supply is tighter. And also war-related risks plus occasional port disruptions make logistics more complicated. And according to the customs statistics of Ukraine, in September-January 25-26 marketing years, soybean exports amounted to 1.21 million tons, which is 0.74 million tons less than in the same period last year. So it's less for around 38%. The main importers of Ukrainian soybeans is in the corresponding period were Turkey, the Netherlands, Germany, Italy, and France. In Ukraine, we also see roughly the following levels. For buyers for GMO soybeans for DAP, DAP, Odessa, the level is around 435, 440 $440 per metric ton. For non-GMO DAP Odessa, it's around $460 per metric ton. For DAP Border, it's around $435 per metric ton. And average price that Ukrainian crushers are ready to pay for Ukrainian soybeans is 19,000 hryvnias delivered to the plant, but it depends on the region where plant is actually located. And if we're talking about CIF market, sellers expect to get around 505 USD per metric tons for destinations like Mersin, Egypt, Syria, Greece, etc. Meanwhile, we don't see buyers' readiness for such levels, unfortunately. Rumors say that there is someone in Greece who can pay around $490 per metric tons for super spot cargo. But in reality, we see numbers like 485 from buyers in Egypt, Italy, for those who are not in rush. And the non-GMO premium widened to around $20 right now per metric ton.
Great, thanks for the outlook. So I see that premium for non-GM soybeans is expanding again. It's now, as you mentioned, is around $20. Well, let me challenge you with a buyer mindset. Brazil is huge and available. Why would I overpay for Ukrainian soybeans now?
Because price is the only one part of the deal. Buyers also pay for, first of all, predictability, shipment windows, execution reliability, and in non-GMO substitution, it's not always easy as well.
So Brazil keeps soy markets heavy with record supply and fast exports, but nearby demand still pays for execution.
Yeah, exactly. And my point of view, if we do it like overall, that globally there is a tendency for overall market price decrease in prices due to the statistics information that we see from Brazilian and other markets. However, there are hopes that after China is back from the holidays that they have right now, demand will improve, and because of that, we see CBOT level more on the positive side right now. I also believe that the Ukrainian market will continue its own path, as we have different and totally unpredictable circumstances that can change the market levels just in one day. For example, weather changes, active attack on port infrastructure, tariffs from the government, etc.
That's interesting. Thank you, Vlada, for today's podcast. That is for today's episode of Prospex Agro Market Talks behind the Brokerage Desk. If you trade soybeans complex and want real beats, workable specs, and execution options by destination, reach out to Prospex Agro. Thanks for listening and see you in the next episode.
Bye-bye.
Bye.